Hi folks, my guest for the first edition of the Niyogin Story, a new bank in the making, is Tashwinder Singh, the CEO of Niyogin Fintech Limited. Tash has more than 27 years of leadership experience in both strategic and operational roles, having been part of the senior management team of Citibank and KKR. Niyogin Fintech Limited, founded by Amit Rajpal and Gaurav Patankar in 2017, is a banking-as-a-service platform infrastructure provider that was started with a vision to serve India's underserved SMEs. The Niyogin team calls themselves a passionate group of people who are reimagining the future of small businesses in India by applying technology, data, analytics, and human understanding. Over the next 30 minutes, I would be quizzing Tash on what makes Niyogin unique, what the key challenges are, and how do they see Niyogin making a mark in the fintech space. So Tash, happy to have you on the show.
Thank you, Divakar. Thank you for having me.
So let me start with this general perception that Niyogin primarily focuses on unsecured credit business, a space that is perceived as risky due to the vulnerability of the underlying borrower class and the chances of default being very high. How would you react to that perception?
Divakar, when we first started out, right, Niyogin focused its first foray into the unsecured credit market, which sort of explains the impression you have. But very quickly, we moved away from that space because we realized that to make success in the unsecured credit market, you need to have differentiated information about your borrowers, right? Without having that information, it made no sense for us to continue in that space. So we pivoted away from the unsecured credit market, where we created a platform that provides banking as a service for our client base. Now, what that did for us is it changed our revenue profile from being largely interest income led to be more fee led. Today, almost 75% of our revenues are fee led. We didn't walk away from credit. We still do credit, but the credit that we do is mostly transaction led, and it's basically providing credit to customers who are dealing with us in our payments business. So in some sense, it's a closed loop mechanism whereby we are able to provide credit with the differentiated information that we get with the customers using our payment platform.
Interesting eye opener, that Tash. That at least clears a perception for me that Niyogin is credit led. So if not credit, what are the segments we straddle? And I would be particularly interested to know about the BaaS platform that you alluded to.
So like I mentioned, right, moving away from credit, we created the entire banking as a service concept. Again, there are 2 points which are important to note. One is, what is the business design versus the product stack? I think we focus more on the business design, which is building the platform. And then you could keep latching on new products, which could either be manufactured by us or we could source them from third-party manufacturers and provide the full stack banking services. Number 2, what this does is we have a partner-led model where we are dealing with the partners who are using our platform to provide banking as a service to the eventual customer, helps us access those customers in a cost-effective manner. So what you've done is you've created the platform and you've got a cost-effective market access. Right now, when we acquired our rural financial inclusion platform, ISERView, right, we were able to deliver this pretty quickly into the market. Today, we have more than 200,000 retail outlets that are delivering this proposition. We have more than $1 billion of GTV that is being done. And like I said, 75% of our revenues today are fee-based. So that's really how the model has evolved.
Fantastic, Tash. That gives me a good idea of what we're trying to do. Can you explain what is the problem statement that Niyogin is trying to solve and for whom? Also, what kind of market opportunity are we looking at for the areas that we present in?
So Divakar, to explain what problem we are solving, let's talk about the landscape. Right? We've got 65% of the population which is still living in rural India. Now, a large percentage of this population has open bank accounts thanks to the Jan Dhan Yojana. But do they really have access to banking? Are they really getting served? Think about from a bank's point of view, right? It costs anything between 30 to 40 rupees per month per bank account to be able to manage these accounts, right? And these accounts don't necessarily keep the balances that a bank would like to see. So the problem statement that you need to solve is, how do you serve these customers? And that's the problem we are trying to solve. How are we solving the problem? Now, there is a large network of kirana stores, small retail shops, etc. that exists throughout the country, right? At last count, there were more than 70 million retail outlets in rural India. The problem statement we are solving, or the solution that we are providing, is trying to convert these kirana stores into financial services kiosks. Provide the technology whereby customers, individual rural customers, could walk into a kirana store and get access to their bank account, get access to cash, be able to do some basic banking services through that Kirana store, right? Using the entire network of BC partners, powering them with our technology to be able to deliver this service. Now, when you look at the size of this market, right, just the digital to cash or cash to digital, if I just add that up, that today is a $50 billion GTV market, right? And this market is not static. This market is growing and growing in material terms. So we think this is a very, very interesting place to be playing in.
Wow. So what I'm hearing is the market opportunity is huge and is underserved. So as we tap this $50 billion transaction opportunity, one question intrigues me. Won't this get hotly contested by the larger players like Paytm and Pine Labs, who have far greater muscle power and presence, and plus the fact they have the first movers advantages in India? What are we doing differently that kind of gives us the right to win today as well as in the future?
So Divakar, they are great companies. Pine Labs, Paytm, these are great companies. Pine Labs, Paytm, Niyogin are in some sense competing in the payment space, but I think they are very different companies. And they're different on multiple parameters. One is the scale at which they're all operating. Number two is the client set that we are serving. And number three is the business design, right? So I think there are some differentiations that exist between these three companies. I think Niyogin is different in two ways, two primary ways. One is the fact that we are focused more on the infrastructure. So we are building the infrastructure. The end customer is not owned by us. The end customer is owned by our partner, right? We are powering our partner to be able to deliver services. That's, I think, the first big thing. The second thing different for us is our go-to-market strategy. In our go-to-market strategy, again, the fact that we are powering our partners makes our cost of client acquisition extremely low, right? And we are able to acquire customers in bulk. Because when we get one partner, right, the partner comes with a large number of customers in one shot to us, right? As he moves all those transactions on our platform, we suddenly get a large, kick up in terms of our volume. So I think the businesses are different. Of course, we are a company that is much, we are in our early stage compared to the two names that you mentioned. They've been at it for a much longer period of time. But I think our business models are different.
That's quite interesting. Tash, the more I hear you, the more I'm convinced that you've got a story going here. However, there's this million-dollar question here. How do you make money? Investors definitely need to know your revenue-generating capability. Can you throw some light on the revenue model across segments, and are those revenues linear or exponential?
So Divakar, these businesses are about scale, right? And I think the idea is the business model and the business design has to allow for scale. But there has to be a mechanism where you can make exponential revenues, right, on the revenue side, but your expenses have to be non-linear, right? So the expenses have to be pretty much static, right? So I think our business model is focused on exactly that. For every transaction that gets done on our platform, we make a small fee, right? That works quite well. But there isn't an incremental cost which is material for every transaction that gets done. So as the volumes go up, right, we would see a pretty significant or you could call it an exponential rise in our revenue streams as our volumes go up. Apart from that, we also make commission income from third-party products. Could be insurance, right? By selling insurance, once you've got the distribution going, you can pump in new products through that distribution. You make some commission income on that. But don't forget, we still provide the infrastructure, which is in the form of devices, right? Could be micro ATM devices or AEPS devices. So we make a small commission on that. And then we also provide credit. Right? So for the retailers that are operating our platform, we are able to provide credit, right, to help them augment the level of business they can do through the payment platform that we have. So all these are multiple streams of income. Interestingly, like I said earlier, most of these streams of income are fee income, which I think works really well for our model.
So multiple revenue drivers there. Having said that, I believe the business model is still predicated on two key drivers: scale and an active M&A strategy. So what's the company's goal for scaling various parts of the business, and how would the M&A strategy evolve as we move forward?
So I think our growth strategy is primarily driven on two vectors, right? One is to expand the scale. And when I talk about scale, I talk about the distribution network that we have. So onboarding new partners, which can get us access to a much larger footprint on the ground, is important to us. And that's a continuous process. We currently have in the ballpark of 200,000 odd retailers that are currently using our platform. And the plan is to get to 1 million over the next couple of quarters, right? The second important thing for us is to keep expanding our product stack, because the product stack makes us more relevant for our customers, right? And that's what we are focusing our energies on right now. The M&A strategy, as you mentioned, is also focused on both these vectors. I would say we are a little more focused on the expansion of the product stack. Part of it is through our own tech build, and part of it could be by using third-party service providers or by acquiring companies who we think have built pretty interesting propositions on the product stack.
That's good to hear. But from an investor standpoint, where do you see this company in the next 3 to 5 years, Tash?
So Divakar, our vision is to be a premier banking as a service platform provider, and we want to make sure that for our customers, we are able to provide the full stack neobank product, right? I think in terms of mile markers, investors should be tracking us on our expansion of our distribution network, on our product stack expansion, and more simply, they could look at how much fee income we are generating on a quarter-on-quarter basis. These could be good ways for us to measure. The second thing I would say is that we are operating in a space where we think the landscape is quite huge. The opportunity set is quite huge. So it's difficult to sort of put numbers on where we will be in 3 to 5 years. But the opportunity set being so good and so big, I think keeps us very excited and motivated as we get to work every day.
Thanks, Tash. This has been really enlightening. I'm definitely going to watch this space.
Thank you, Divakar. Glad to be on the show.